There are 630,000 more home sellers than buyers in the market right now. That is the biggest gap in history, as far as, at least on record, I should say. And as far as mortgage rates go,
higher, baby. Get higher, baby. Get higher, baby. And don't ever come down.
that's right, higher, baby. Rates, unfortunately, continuing to increase, which is definitely putting a lot of strain on the home market, on the housing market. 30-year fixed rate mortgages. I like to look at this Mortgage News Daily. You can see we have shot well above 6.5%, and you got to go back a long time. I mean, back into August maybe of 2025 before we've been at this high of a rate, and we had came nicely down, and then we got this bounce and has been on a parabolic rise ever since. Is the Fed going to save us? This is the next Fed meeting here. 95% chance they don't do anything with the market, meaning as far as the Fed funds rate. June, 92%. July, 88%. September, 73%. And actually getting more and more pricing in a rate increase here. The rate increase and the way that the market looks at the way that the market prices in the future is what you're really seeing, because we had 3 rate cuts priced into the market, and now we have none and a potential for rate increase. I personally don't think we'll see a rate increase, but man, we got to see how a lot of this Iran conflict and a lot of these things play out, because if you're hearing the ugly word in the mortgage business or in the mortgage rates that we don't want to hear, and that's inflation. If you hear the Fed continuing to start ratcheting up their talk about inflation, they're going to start setting up to maybe raise rates. And that's what they're saying when they're worried about inflation, the price of oil, and all these things. So I really hope we get an off-ramp, regardless of what the politics are for the housing market. You really don't want to see rates getting close to 7% again. You know, every 1% in rate decreases the buying power of a buyer by 10%. And you are seeing buyers starting to sit it out. Look at this article from REFDINS saying there are 630,000 more home sellers than buyers. That is the biggest gap on record. You know, a lot of times we talk about 2008 and how much inventory there was, but we weren't tracking, and I looked at some old data, there was a bigger gap between home sellers and buyers back then. Since Redfin's been tracking it, this is one of the biggest numbers, and this is a scary number, because this means that you are going to get downward pressure on houses if you keep this big gap, right, and you get rates really going back up close to 7%. Sellers outnumber buyers. The buyers who are in the market have the bargaining power. In other words, it's a buyer's market. The strong buyer's market in the South, while the stronger seller market's in the Northeast. And there's a tale of two markets depending on the areas. There are more than 50% more home sellers than buyers. And you can see this just massive increase. I like this better because this shows the gap. So sellers right now are sitting just close to 2 million. Buyers sitting at 1.35 million. This is the gap here. Now you'll notice the gap always closes, and you can see that there are reasons for imbalances, but this was when buyers were outnumbering sellers, right? When rates were so low. Look at how just like the exact opposite picture here. And look at inventory, you know, as far as sellers go. We don't have an inventory issue, right? I mean, inventory is not out of control in any way, shape, or form. We have a buyer participation issue, right? Home buyers are retreating due to stubbornly high home prices, mortgage rates, layoffs, and mounting economic and political uncertainty. Stronger buyers market here in the South. In the North, it's less so. And they break it down by a lot of different markets here. Look at Miami. They're leading the list, I believe, at 162%. And this, the 162% is percent by which sellers outnumber buyers. And Orlando's on here as well. It's not a pretty picture, 73.6%. And we see that showing up in pre-approvals. We see it showing up everywhere. You know, we even see there's an article from Redfin that I'll cover in a second talking about 14% of homes canceled in February. And it's just because when buyers have choices, they're just going to cancel easier, right? If they're out looking at a house and there's something going on and the seller's like, well, I'm not going to fix that. The buyer feels like they've got more options to either negotiate with that seller, push that seller into doing it, or finding something else. Now, all markets are local. You might be watching this. I live in Oviedo. And Oviedo, a really nice house, still has competition. So you really got to know your local market. But there's no doubt in almost all of Florida, buyers are in control of the market. And you're going to see that trend continue. In fact, if rates continue where they're at now, you're going to see more buyers not participate. And we've seen an increase in searches on Google for things like my home is sitting, how to sell a home faster, what to do if my home's not selling. And those are a good indication that sellers are worried. Now, there's not a lot of negative equity in the sense there was in 2008, where people were way underwater and walking away from their houses. Most of these people have a fair amount of equity, but they're just either gonna have wish pricing, keep it on the market, and if they get an offer, great, or they're gonna take it off. Buyers or sellers that are motivated, they're gonna have to deal with buyers that are more in control and can ask for more things from the seller. Now, this was what I was talking about, this 14% of home sale agreements fell through last month, a record for February. Now, I will say take this with a grain of salt, because this is the 13.7% in February, and you can see that is not that far off the norm over the last 4 years or so. And in general, we've been running higher since 2023. And this is gonna be lots of different reasons for this. Obviously, the more buyers are in control, you're going to see more cancellations, because sellers are getting bullied by buyers, just like it was the other way. And if sellers don't wanna, play ball with the buyers, so to speak, then those buyers will just move on. Now, with that being said, 14% is not a massive amount. It's almost 2% higher than it was the previous February, but we don't want to see those kick up. This is all driven, to keep it simple, by interest rates, right? The overall market, as rates fall, payments are lower. With YouTube and people with their cell phones, there's information is so fast. So if they hear, oh my God, we shouldn't be buying a house, people react instantly. So we're gonna pay attention. We've got the next few months, we've got some Fed meetings coming up. We've got a new Fed chair coming in. We have the conflict in Iran that maybe will end or not. And man, there is so much to play out. And if you're a real estate agent, there's lots of opportunity. I talked to a few real estate agents that are just crushing it now. So don't let the market affect what you're doing. You still have to have a daily success plan. You still have to know what to do every day, and you got to row, whether you feel like you're rowing upstream or downstream, you still got to row. What does that look like if you're a real estate agent and you're rowing in your business? If you're a buyer, you have to be taking advantage of, man, if you see a house sitting on the market for a while, write a disrespectful offer. See what the seller will do for you. That's what I do as an investor. So we're going to track all this and more as it comes out. Hey everyone, this is Race Robinson, your favorite Florida mortgage broker. Have a great day, great week, and I'll talk to you soon.